Hello everyone, hopefully you're staying safe out there in this crazy market. We're going to get started here in just about 10 minutes with Nic Chahine, and go ahead, throw something in the chat. Let us know what your experience is with options, whether you're a beginner or an experienced trader. We'll have something for you today. Let me know if you know what vertical spreads are. Vertical spreads are something very integral to Nic's trading strategies. We'll cover what is included there and how to execute a trade with a vertical spread. And tell me where you're tuning in from. I am from Detroit, Michigan, from downtown Detroit here at Benzinga HQ, and I'm really excited. Should be a great time here. We'll get started in just about 10 minutes. Awesome. Welcome, George, Michael, Air from Toronto, Philippe, Bill from London, all over the world here in Bucharest. All right, no worries, George. We'll start from the ground up. We'll cover just the basics of what an option contract is, and some of these fancy terms aren't as complicated as they sound, but we'll definitely learn some good principles and then show you some strategies to use and even make money in these volatile times. All right, I might need to switch up this music so that I don't fall asleep here. But let's go ahead. Nick's not in the room yet. He's still finishing up his live trading room. But go ahead, throw something in the chat. Let me know if you are ready to roll. Say ready in the chat. Let me know that you have your pen and paper out, because we have a lot to cover today. This is going to be a jam-packed session. In fact, I'm going to stop my share screen here. Like I said, my name is Jonathan. I'm here at the Benzinga headquarters in Detroit, and I am so pumped to have the session with Nic. It's been a couple weeks since I've been able to work with him on one of these sessions, and it looks like there's a wide range of experience levels with options, with spreads in the audience here. Roy, I see you're ready. Philippe, you're ready. Joy, you're ready. Fantastic. Let's go, Wall Street. See you in the chat. Fantastic. All right, yeah. So we'll get into the principles. I'll basically let Nic do the talking. But he's been working with Benzinga for about 11 years now as one of our analysts, and then more recently with Benzinga Pro. If you want to follow along with some of the stuff we'll be covering today, if you don't already have access to Benzinga Pro, it's a free trial at pro.benzinga.com. So feel free to log in there, and you can kind of see some of the trades that we'll be talking about in today's session. And then actually I might share my screen again just to tell you a little bit more about Nic. No, I don't want to leave the webinar. I want to share my screen. There you go, share. So who's Nic Chahine? Well, like I said, he's been working with us for quite a while, and this is a screenshot from not too long ago with his success rate on a website called Tip Ranks, where it was rating his success rate just on stock picks. So what we'll be talking about today are some option strategies that can mathematically increase your probability of winning. You don't have to be a genius at picking stocks, and we're not talking about YOLO trades for like 1,000% winner on a penny stock. No, this is straight up math where you have a higher probability of winning, and it can work in down markets or up markets depending on how you structure the trade. So I'm really, we're really lucky to be able to work with Nic, and you'll see his face hopefully here in a couple of minutes. And the way that this will work out is Nic will share some of his basic principles for trading. He has a little slideshow that he does, and then we'll dig into vertical spreads. What are vertical spreads, and how do they increase your probability of winning? Specifically, Nic uses a lot of bull put spreads, and then he knows how to do all the other fancy stuff, which if that's all new to you, don't worry. You don't have to dive right in. You don't have to know everything. But this will give you a very good foundation to increase your probability of success and build your account up consistently over time, even when, honestly, it's been a bloodbath out there the past couple of days. So we definitely want to learn how to protect our accounts and still find that upside. All right, yeah. What's up, Voz Trades? One of them makes, all right. Yeah, it looks like you're selling some puts into earnings. There's a few different strategies you can do there, trading around earnings. And then I see air. Yeah, ready to go, kindly with caution. Hey, always caution. Always don't just take our word for it. You have to test all this out for yourself. Oh, and there's Nic. I think Nic is in the room. Can you hear us, Nic?
I am here. I'm trying to deal with the noise. My son decided to start hacking up a car. He likes to fabricate, and he's working on a truck, trying to make it snazzy. So I apologize for the noise in advance.
No worries. I don't hear anything, at least at this point,
You
on
will.
my
You
end.
you will.
All right. Well, and do you have video today, or are we just doing audio
I
on
do
your
I
end?
do have video, although I didn't comb my hair or anything. Let me see here. Where is my video button? There it is. There it is. I'm right here. Yay. Oh, wait. I'm right here.
There we go. Good to see you, man. It's been a minute.
Okay, it's been a while. I haven't we haven't done this in a while, so I was looking forward to it.
Yeah, me too.
Um, the format is going to be pretty plain and simple because of the headline, the way we wrote it up, or you guys wrote it up. Today was pretty active in the chat room and the live room. So I guess we should start there by saying what we have and what we're going to talk about. So I'm going to use these terms so that the audience knows what we're talking about. So part of the service is we have on Benzinga, we have a chat room that I host, and it's busy, hundreds of people. It's open 24/7. It's basically a place where we can communicate back and forth. If you have questions or you want to discuss something, this is where the flow of ideas goes back and forth, and the write-ups daily and the weekly write-ups and um, the presentations on Sunday. And then on top of that, we have another layer, which is the live room. And I'll show you snapshots of what happened today. And that's where it's also a chat room because we do chat. I tried to keep it no chat. It was impossible with 312 people this week at its peak, 318, I can't remember. Today it was 285. It's hard to keep control of the chat. So we do chat all day. But what comes out of it? The number one thing that comes out of it is education. We learn how to become less, how to wing it less. So the point is, like today, I took snapshots not because of winnings, because of comments they made. I've learned so much since I've been here. That's the goal. I'm not a trade alert service. There are better traders out there, I guarantee it. I enjoy teaching and showing what not to do and the mistakes that are easy to avoid. If you've been long any of these high flying names, Unity, Coin, Upstart, you saw the damage overnight, last night, SoFi, which is one of my longs. The damage is tremendous because of people making mistakes, and now we're paying for them. On the way up, it was too wrong. On the way down, they overshoot. And a whole bunch will die, and the good ones will survive. So we're going to learn how my method could build a buffer.
And what I told everyone, Nick, was that we would be digging into your principles. You know, you
Yep.
always share your principles,
Yep. I have
and
them
that
ready. Everything is here. Yep.
and then really there's always a lot of beginners in here that are not familiar with vertical spreads, or maybe they've been trading for like 1 or 2 years but with some bumps and bruises along the way. And
We're going to discuss that as well.
perfect.
I'm ready for you. I know the format. I know what works and what puts the point across. And we're going to hit it one point at a time. So let me take the screen if you don't mind.
Absolutely, that's perfect.
Okay, so I'm going to share my screen. Which one? CRM, this one. Okay. All right, there. Perfect. So you're watching my desktop. Normally, you will be watching this live every day, all day. This and 5 other tabs like it. And we trade live every day. But first, let's jump into the do's and don'ts. And they're very simple. I'm going to show you the presentation. I'm going to speak. I'm not going to run it. I'm just going to speak to it. So this is what pros do. The difference between somebody winging it and somebody who knows what they're doing that has a process. That's it, having a process. So have a method. that brings confidence, because in order to develop a methods, you're going to try things that don't work and make mistakes. I'll offer you mine. You start there. You fix it to where it suits you. And then you can say, okay, I've got a method that works. It's based on what Nic showed me. And now I have confidence it works. Well, the only way it actually works is if you have the discipline to actually apply it. Like, it's all fine and dandy to have rules. And if you break the rules all the time, but you don't have the rules. You just have a nicely written piece of paper. Okay, so having said that, the goal here, I have 3 different pages, but just bullet points, is to tell you what elements should be in that method. And then maybe we can come up, you can come up with a method, and then we can discuss it later. So maybe you already do some of this stuff. Most people do the right things, only not as a method. They sometimes do the right things, maybe by chance. Okay, so the first things first is risk. Never take a risk you cannot ascertain the maximum. If you don't know the worst case scenario, if you can't tangibly say this is the worst case scenario, then you should never take the risk. So this is an impactful statement. This discounts you ever selling a naked call or ever shorting a stock outright. So if you don't know what those means, you will know later on the call. But if you are in the habit of shorting stocks, like the traditional way, where you actually borrow shares to sell, you sell stock you don't own, you don't know the maximum risk. You can say you put a stop loss, but it's not a guaranteed fill. And if it does fill, you don't know where. So those who did that with GameStop went bankrupt, not like lost money or lost their account. They went bankrupt. So hedge funds went bankrupt, right? You've read of Melvin Capital shrinking down to nothing. Others completely went belly up. No good. So risk size is the first decision. Yes, I will take this trade. No, I won't take this trade. I make the risk size decision. We're going to discuss a subset of this a little bit later, but just know that the first decision of what do I do in my method, I have to know the maximum risk, and I have to be able to survive it comfortably. So how big is too big? If you're thinking about it when you go to bed and you're thinking about it the first minute you wake up, that's too big. If you're nauseous when you think about it, that's too big. If you find yourself going out of nowhere, watching TV, you have too much at stake. So risk size matters, because when your back's to the wall, you make mistakes. You start making decisions wrong. Okay, risk position. In options, position is the correct word. In many other forms of investing, it's the odds of success. That's the biggest part, the second biggest part of risk. First, you say, okay, I'm going to risk 5,000 or 1,000 to take this trade. And the second one is, what are my odds of winning? And most people don't have a way of make it a tangible number. So you think, I think I have a 70%. Well, how do you know that? Well, with options, you know that. It's a number on a piece of paper. I'll show you. So even if you don't trade options, I challenge you, next time you go buy shares or decide to exit shares, or to see how likely it is for your target to come to, let's say you decide to buy Apple and you say, I think Apple will be $180 in 6 months. I can tell you exactly what your odds are of that. You can tell you that if you just look at the options chain. You don't need to trade options. They're available free everywhere. So you look at the chain, you say, oh, I guess it's not very likely, or yeah, it's definitely likely. So the odds of success is the part you manage, not this part. The part you say, how much can I lose? You say you're okay with that, you move on. You take the trade, you don't take the trade. Once you take the trade, this is your part to manage. What are my odds? What do I mean? You take the position, price moves, time passes. Are my odds still the same? If not, then I should reassess the whole thing. Like, for example, if I took a position in Apple, bought shares, and I thought my chances were 70%, there's a good chance I'm going to win because Apple is going to go from wherever I bought it at 155 to 175 in the next 3 months. let's say a month goes by and Apple has done nothing. Maybe it fell a little bit. Maybe you say to yourself, you know what? Maybe I jumped the gun. I haven't lost much. My odds are I don't like them anymore. I should get out. So that's the part you manage. Well, with options, it's a lot easier than this. The number changes every second. Time is of the essence when you're dealing with options. So it is extremely important to manage that. With shares, you can sit on them forever. And with Apple, if the markets are higher in the future, so is Apple, at least for the next 3 years. So it's not that crucial. With options, if you don't pay attention to time and space, that's the difference between having winners and losers. Today, just today, in the chat room and the live room, I had a discussion live. He opened his mic because he said, I can't type today. So he opened his mic. He sounded young. I don't know how old he is. And we had a whole discussion about his positions. He was in Wix, and he said, I have all these other positions, and they all sounded like the same stock. And he's down 40% on all of them. So we had a whole conversation as to what fundamentally was going on. So we will have more of that conversation. So he feels much better about it because he probably has a plan and action now, what to do next and what not to do next ever again. Okay, so now let's jump into it. There are no shortcuts. There is no, I know the headline says 90% winning. It's not a foolproof strategy, but it is statistically viable. So if anything else, I have statistics on my side. So the only way I lose is if something outrageous happens. Like if you avoid earnings, then you cut away most of these outrageous things. So you would have fewer of those instances. If you cut away sectors like biotech, then you would cut out a whole bunch of possible blowouts with credit spreads, the way I like to trade. So if you can avoid a few sectors, a few type of tickers, a few periods of time, a few events, you can cut away most of those blowout instances. For example, if you're a person that traded credit spreads, sold put spreads, sold iron condors, whatever, in Netflix or Upstart, you did not survive. There's not one on the planet that actually won on those. Not even market makers won. They got shellacked too. So you can avoid a lot of drama by being boring. Boring is beautiful, trust me. Okay, there is no shortcut. There's homework, and we do a ton of homework. And here's the thing, if you're in my group, you don't need to do homework because I do it for you. Every Sunday, I do it all week, like all day today, live, people asking me. I do it every day through the chat room. People can ask. Live room, chat room, two different things. One is live where you're watching my screens. One is not. It's like Discord. You pop in, you say your thing, you hook up, you send me a DM, you don't. Then we chat it live, and if somebody's logged in, they can answer you live. If not, they'll answer you later. But anyway, Friday, I send you a form saying, tell me your tickers you want to discuss. And then I do homework on Saturday for hours. I put them in a nice table. I put my comments. I put the links to those charts. So it's not dynamic. It's available for you to click, and you come up with a chart for reference all week. And on Sunday morning, we get together for 2 hours, maybe a bit longer. We run through all of them. And I'll record a video. If you can't make it, I'll share the video, and you'll have the cheat sheet with you. So you can't avoid homework, but you can get help. And we have help. And I'll give you I come up with the trades from those homeworks. I'll say, oh, okay, I like this. I'll make notes. And then I also, when I do homework, I set alerts. And trust me, I have, 30 alerts to go through this week because of the drop we had. Alert. So I downloaded them, and I have them in an Excel file, and I'm going down one at a time. There's no shortcut to when volatility hits. It highlights the need for the fact that there is not the need. It highlights the fact that there are no shortcuts. You have to do homework. You have to be diligent. And this is the biggest diligent one coming up here, NT. So I have a shortcut for this guy. Let me see here. I use it so much. Watch my screen. I have a shortcut built in. I type it so many times a day. NT, no trigger, no trade. So it is also no thesis, no trade. So what does that mean? If I have an idea of a stock going from here to here or from here to here, or I shouldn't take a position without an actual reason or an actual trigger on the chart. So the reason has to be like fundamental. And somebody that says, I think it's going up, that's not a reason, that's hope. I think it's going up because what I saw on ... Okay, now you have a reason. This way you can go circle back and see if that reason is still there. If not, you should question why you should be in the stock. So how do you know when to leave the position? Is when the reason goes away. Sometimes the reason is on the chart, no trigger. If you see a breakdown, I'll show you some that happened today. They were on crack. I mean, it was like the whole process plays out in minutes, but it's the same process on the daily chart or on the 1 minute chart, or we went down to 5 second charts today. And we had, I want to say 3 home runs today. I was even able to participate. Usually I can't because I'm busy coordinating everybody. But today I took a position and I booked 170% win in literally maybe 10 minutes. Other people booked 40% in 2 minutes, and I'll show you there. Anyway, so, but the process is the same. We saw a trigger, we jumped, and we got results. Earlier in the day, I saw a thesis, and I said I would do this if that, I would do that if that, and I gave it, and they followed. But we had a plan. Nothing was winging it. But the same thing happens on a longer time frame, and we can pick a ticker and we'll do it from start to finish at the end. Okay. So once you take a position, so now we know how to take a position. Once you take a position, you must immediately have an exit plan. If I buy something like today, I said, okay, I'm going to get that contract and I will get out if this or if that. So if the contract drops X in price, if I lose X amount of my money, X% of my money, I'm out. And that X is different between you and me. I may have a more aggressive or more conservative. I tend to be chicken when it comes to money. I'm not chicken in life. I'll face danger face to face. I'm a high danger kind of guy, but not with money. When it comes to money, I am frugal as can be and chicken. So I take bets when I know I have the edge. Otherwise, I don't take the bet. So all these earnings I skip because I would rather make the bet after the earnings with information in hand, willing to miss out. Okay, so you have to have an exit plan, which means if I lose X% of my money, I'm out. Or if I hit my target, I'm out. Or if I make X%, I'm out. Sometimes I'm not out completely. I book or lock profits. Okay, so let's recap. You need a method, and you need to stick to the method so you can have confidence. The discipline part is pretty important. You need to know your risk. Never take risks that could blow you out. Never, ever. And if you don't know what the worst case scenario is, don't do it. If you've never done a credit spread, take it on paper. Ask questions. Don't come to say, how can I close the spread? If you don't know how to close the spread, you shouldn't have taken the spread. Okay. So practice. Come to me, how do you close a spread that I took on paper? Okay, now we're talking. Risk position, meaning you have to manage your odds of success every day. Are my odds still the same? Are my odds acceptable? No, I should close it, win or lose. That's risk management. It's this part, not that part. This is a decision you make. This is how you manage your risk. Okay, now, how do I take trades? I don't wing anything, and nothing is done without homework. Why am I taking this trade? If there's no need to take the trade, I'll do the homework. I'll set my alerts. Example, I trade crypto. We do crypto. I set my alerts. I've never lost money trading crypto because I set extreme alerts. Wake me up when this hits right here. I don't look at it any other time. When it hits at here, it's probably when I'm sitting watching TV, boop, boop, bye. I'll buy a portion according to plan. Nailed crypto and shared it by videos. So have a plan, do homework, set alerts. And if you don't get the trigger, don't get the trade. If you don't have the reason, you don't take the trade. That's my motto. And once you take a trade or a position, you set your exit plan. Okay, I'm risking this much. I'll get out if I lose 20%. I'm risking this much. I'll get out if the stock hits here, or I'll start to scale out, or I'll book profits because I got X%. Let's say my daily limit is, okay, if I get 20%, I'm out. Or if I make $500, I'm out. Or if I make $100, I'm out. I don't know if you know that. I'm excited. The SPX will have daily expiration soon enough. So today we use the Tuesday expiration, which is pretty new. If you don't know what that means, they're going to have contracts in options on the SPX and many more, I think, that expire every day, which means I don't have to sweat the overnights anymore. I can make, like today's 170% was based on using contracts for expiration today. I saw it late in the day. I said, I bet you this is going to happen. I'm going to risk $100 per contract on it. Boom. Bit late, actually $95. I sold it. I forgot how much it was. Anyway, it was a big win. It was an easy win, but it was based on homework, and we waited, and then we saw the crossover. Boom, we jumped. Okay. Do's and don'ts. This is like miscellaneous stuff that I've already said. But one thing I want to circle back on right here, I said there's a stipulation. I'll discuss it here. How much money? Okay. So the discussion I mentioned earlier with a young man who identifies as a man. I'm just kidding. Come on, I'm just kidding. He's the tickers he mentioned, they sounded like they're all the same. So he did not have balance. He's new. He said he's new. So this is an easy mistake to make. So if I'm long SoFi, Affirm, Upstart, PayPal, IWM, ArcK, I'm long the same stock. Coin, I'm long the same stock. They move together. They're all high growth, not all. PayPal is not, Upstart is not. They're great companies. They're all high growth, and most are high spend. So right now, Wall Street has no risk appetite for that. So he did not have balance. So he should have been long a little bit of maybe short a little bit of oil, long this, long that, short the indices, have balance. Don't have all the same stock. Okay. Spread the risk. By spread the risk, I don't mean like create a spread. Spread your risk, sprinkle. And that is time and size. I'll give you an example. I just mentioned the crypto, my crypto. I knew I wasn't going to take my entire risk at one time. I knew that for a fact. I did a video. I said, Bitcoin is going to correct. And that was late October or early November. I said, if it loses 44-ish, it's going to go to 20, but it's going to do it in steps. And I said, the first time it hits 33, which is now, I will buy a batch. But it happened in January. I bought a batch. It rallied 40%, 30 to 40%. So somebody could have booked it. I said, this was my third buy. The other two delivered 30 and 38%. So this one, I did not want to sell it. It's a building position for the long term. So I only took 1/3. I said, when it hits 28 to 25, I will buy a second batch. It hasn't. But I got the alert because I still have it set from the first time. So I added a little bit of Ethereum because I didn't have enough Ethereum. So I'm still 1/3 of my total batch that I want. So I'm spreading my risk across time. So I'm not buying it all at once. So this is the idea of averaging in, not down. Big difference. Don't ever average down. That is a loser attitude. What does that mean? Let's say the first time in January, crypto fell, and I just bought all the crypto I want. And then let's say crypto fell down to 20. What would I do then? Double my problem by averaging down? It's not a good idea. Tell that to somebody who averaged down an Upstart. Not a good idea. But if they had bought, I bought Upstart stock today. I rarely do that, but I bought nothing, just to relieve the itch. I bought equities because I sold calls right away on them. So I'm not down or anything, but it's nothing I'm married to. So, but here's the thing. I knew I didn't buy nearly as much as I wanted to. So I bought a small portion. Let's say Upstart falls to, I don't know, 15. I can buy a second batch. So now I would have bought it way lower. But if I had bought my entire allotment at once and then it gets hammered and then I double my problem without knowing anything, my watch thinks I'm working out because I'm doing this. So it would be making my problem bigger. That's not very smart. Averaging in, super smart. Averaging down, not smart at all. I'll give you an example. With crypto, somebody mentioned you ought to buy Zilliqa, ZIL, which is a metaverse BS company about crypto. So I was like, I guess so. So I bought it and then it fell apart and fell to 7 cents. So I bought a small portion. So I added another small portion. So now I'm long at like around 11 cents. So I'm only down 4 cents. In percentage terms, that's a lot, but it's a small bet. And it's a long-term accumulation based on the metaverse proliferation. And they seemed like they have a good spread. So I was like, okay, I'll risk a little bit. Had I gone all in, I'd have been in deep trouble. And now I have to decide whether I want to allocate a heck of a lot more risk to it. I've averaged in, not down. So totally acceptable. And I'm not even near the full size allotment that I usually buy in crypto. Okay, so you see that? That is as simple as that. So don't average down, don't hope. Oh, hope goes with this. The odds. Today, at least 3 or 4 people came to me. Somebody said, I'm sorry, I can't see your screen. I'm long. Apple? Oh, yeah, he bought Tesla call 870 expiring this week. Let me see if it jogs my memory. Whoops. Tesla. So the bottom line is he was asking what are his chances. I was like, let me tell you exactly what your chances are, because I can look at the options chain and it expires this week. I think he said this week, 870. That's what it was. I said, well, according to the options chain, you have like a 15% chance. So, okay, Tesla is the kind of stock that can do it, but you're sitting and hoping. I said, if it's a lot of money, you have a very little chance of it not dying. So you basically have your risk at a place where unless something extraordinary happens, it's going to die. So I wouldn't leave it there. If you still want the position, you should harvest that money, take it out, save it, and redeploy it, not more, it out in time. So if I had $1,000 left in that trade, I would rather not have $1,000 dying unless a magnificent thing happens with Tesla tomorrow. I would rather take the 1,000 out and put it to work out in time where it has better odds. That is provided I still believe in the position. So I wasn't there when he took it or why. So I said, if you still believe in the position, I would take it out and deploy it somewhere else. And I said, I would split the risk. So if I had 1,000 left, I would deploy 500 for the same scenario out in time and sell a put spread. So I would spread my risk in 2 things. So the important part is, though, not to increase the size of the risk. So he should be humble in reopening. So if he opened 10 contracts here, he's going to have to open 2 out in time if he doesn't want to increase the amount of money at risk. Otherwise, he's doubling down. And I don't know why he would do that. He didn't have a good answer for it. So I'm glad he shared, because now he knows something new that maybe he didn't know before. So the odds is what he needed to manage. Okay, so the don't hope, he can sit and hope, or he can realize that, holy crap, I only have like a 14% chance of success. I better change it. So you have to redefine the trade. He has to redefine the trade. He's down a lot. So the goal is no longer to make money. Is how do I get out and save as much of my money as possible? Okay, you can close it and say, oops, I lost. Or you can reopen it in a way to where it makes sense. Sometimes if I see that, okay, Tesla is not going there, I'll flip it to be a bearish trade by selling a call lower. If you don't know what that means, if you've done spreads, you know what that means, but that's pretty tricky with Tesla. I mean, you may create something bad. All right, so this is quickly. If you just want to write this stuff down, I'll give you the synopsis. Have a method, period, and stick to it. Define risk, how much, set it and forget it, like Ron Popeil. Are you old enough to know who that guy is? 2, what part do you manage? Not this, you manage that. And in this day and age, don't go all in. Never go all in. Just pieces, one piece. There's no conviction. These idiots at the Fed are going to break the economy on purpose. I can't believe they're doing what they're doing. I can't believe they're saying what they want to do. I don't think they're going to be able to. The economy is going to break before they finish their job. No shortcuts, a lot of homework. Set alerts. If you don't have a platform that provides you with alerts, get one. Thinkorswim has free alerts. And I don't know if you need a minimum to have an account in Thinkorswim. I have an account with $2,000 in it. I have an island account there, so it doesn't need a lot of money, and it's a great charting software. It's not the best, but it's available and it's got free alerts. NTNT, don't ever take a trade without a reason. Have a specific reason. Hey, you're on camera. I know, my bad. I usually put a paper out. So the managing the odds is the only way you can actually limit the damage and be consistent with the results. So these are the do's and don'ts that make the difference between somebody who's winging it and somebody who's actually knows what they're doing, so they can repeat. Let's say something is not working, you tweak something, and then you move on. You say, okay, my method is going to be tweaked. You have to tweak it as time goes by. All right. So this is where I can take a break if you guys want to talk questions, on the fly questions. Let me see if I can open up the chat room. Maybe I can follow along.
We've got a few questions here from Eric, Ron, and David. Eric's asking, how can a retail trader be successful acting only on a trigger that can make a stock rise if that information always seems to come too late? Ron is asking, how much weight do you give to the option chain? How far ahead do you look at the options chains? And David, yes, I'll be providing the recording of this to everyone later on. So I don't know, either one of those you could go after, Nick.
Okay, I'm trying to catch up. I have stocks in Robinhood for a while. Now I don't know what to do. Okay, Monique. So it sounds like you jumped into the deep end and now you're kind of stuck. Ali, I don't understand. What are you saying in this live chat? You're not saying you don't understand what I'm saying here. Okay. I don't know how else to say this stuff that is very basic. I'll try to clarify. All right. So I do like the questions from Ron and Eric and Rahul. I like Rahul Verma. I like the comment. Hope does not get it done. Absolutely. Absolutely. So how much weight do I give to the options chain? Okay. So Ron's question is, let me bring an options chain in first of all, and then this way we can speak to it. I'll show you what it is. And do I want Tesla? Maybe I don't. I want Apple. Apple is simpler. Everybody knows Apple. What is going on with my computer? Short AMD. That's what I say. This is my first AMD machine. I mean, the brains are great, but it has quirks. I've been an Intel my entire life, and I'm an engineer, so I'm not like a newbie or anything. So, okay, I'm gonna just put this on top of my screen. All right, there we go. So this is an options chain for Apple. I picked June. So I know some of you are new to options. Some of you know what I'm talking about. So those who know options, bear with me. I'm going to say some basic stuff that you might know. So for you who do not know what options are, you know what stocks are. Options are contracts that revolve around stocks. So they come in two flavors. You got chocolate and vanilla. You have puts and calls. This side is puts, this side is calls. What they do doesn't matter. I'll explain to you quickly in a second. But just like any other contract, when you take a contract, when you buy insurance, when you go buy a car, when you go provide a service, there's always a contract, whether written or understood. And there are terms and stipulations to every contract. Let me run through a few of the basic terms to kind of clarify what the heck these things are. First term is, what are we talking about? In this case, everything on this paper revolves around Apple stock. That's it, Apple. They call that the underlying. Fancy terms. Wall Street loves fancy terms. We're going to get fancy with the terms. No, we're not. We're going to keep it real. So everything on this paper revolves around Apple. That's one. Second part of a contract, when you buy something, how many? Quantity. So everything on this paper, if I choose any which one of these contracts, doesn't matter what they do, represents 100 shares. That's quantity. So it's Apple, 100 shares. Third, price. Let's agree on a price. Oh yeah, they're right there. We can choose whatever price we want. We can have vanilla or strawberry or chocolate. It doesn't matter. It has a price. Okay. So now we have, what is it? Apple. How many? 100. Price, pick and choose. Okay. So what's the most important one here? Next, time. Okay. This, I picked June. June has 38 days. This one expires in the middle of June. I want to say 14th, 17th, 20th, something like that. 17th. So middle of June, this one expires. Why? I just picked it. I clicked on it. I could have picked one that expires on the 13th, which is Friday day. This one expires next Friday, following Friday. So 10 days, 2 weeks. You see the point? And then you can go out to next year or 2 years out. So you can go, these long-term ones are called leaps. They're not different. They're not magical. They don't have powers. They're just longer term. They call them leaps. That's it. So I picked this one. So now we have Apple, 100 shares, any price I want, 38 days. Those are the contracts. They come in two flavors, a put and a call. So who buys a put? I'm going to use the examples of buying protection. If I owned 100 shares of Apple, first of all, I do not need to own any shares to buy or sell any options here. I don't need to have any shares. I can do whatever I want. Now, if I own shares and I buy a put, and by the way, a put is not bearish and a call is not bullish. It's what you do with it. In fact, there's only one scenario where a put is bearish and one scenario where a call is bearish. And the rest are, in my opinion, bullish. So, or not bearish. So if I buy a put and I have shares, I'm looking to protect my shares. Let me walk you through that. Let's say I have 100 shares of Apple and I'm going on vacation and all uproar in the world. Oh, what if the Ukraine thing happened, whatever. And I just want to know that my shares are protected below 135. Let's say I'm okay losing to 135 to the bottom of 40. I'm totally okay losing below 135. I want to be out. So what do? I buy this one contract. If I buy this one contract, that guarantees me the right to exit my shares at 135. How? The person that sells me the contract says, hey, I know you're worried about your shares. I got them. Anytime you want in the next 38 days, you can send me your shares and I'll buy them for 135 anytime. So now I can go to sleep knowing that should the price fall to zero, I have somebody who's legally obligated because of this contract to buy my shares at 135. He, the other person or she, is on the hook for buying them at that price. It only cost me $200. Why 200? Because it's $2, but remember, it's 100 shares. So $200. Small price to pay for peace of mind for 38 days for somebody who loves the stock. So if I did this, I'm not bearish Apple. If I were bearish Apple, I'd sell my shares. I'm just worried a little bit and I love them and I want to buy them. I want to keep them, then the insurance will let me keep them. No different than buying insurance on your car. If you hated your car, you'd sell it. You won't buy insurance to spend on it. So that is the buyer. What about the seller? The seller loves your car, but he wants to buy it cheaper. So he says, I'll buy your car for $135, not at this price. So they too are bullish, not bearish. They want the shares. That's why they sold the put. So if I buy the put and I don't own shares, that's the only bearish play, because the only way I would make money is if price falls. Otherwise, I'm going to lose money because I just paid $200 for nothing. The only way I would make money is if price falls. That $200 will get more expensive. Look how expensive it is. Because at these prices, Apple is 154. So these prices are above 154. So they're called in the money. The price is above them. On the put side, that's in the money. So if price falls, this 200 can turn into 1,000. I don't know how fast Apple will fall and how deep. So once you buy a put, if you don't own shares, you want a drop. You're bearish. That is a safe way to short a stock. I did this with Oxy. I bought a put with Oxy. So I have 76 days where I need Oxy to fall. If it doesn't fall, I wasted my money. How much did I risk? I risked $400 per contract. But I got a drop. I booked profit. So I'm sitting on some profits. I'm still evenish, greenish, evenish. I have 70 days to see it through. So I can wait. But I need a drop to win. I don't own shares. I don't want to own shares. I want to stop the drop. That's it. How many people did I piss off here already? If I'm saying this? Anyway, so that's the put side. Right? So on the call side, it's slightly different. Who buys a call? Do you need shares to buy call? No, that's how you get shares. Let's say I want to buy 100 shares of Apple, but I'm a little worried. I don't want to fork over 100 shares times $155. That's a pile of cash. What if I can lock my price in? That's what you can do. If you spend $700, $7 right there, you lock your price in at $155. So if I'm right and Apple is going to rocket higher and it goes to 180, I'm in at 155. I locked my price. I'm not obligated to buy them, the shares, but I can. So how does it happen? I'll call my broker and I'll say, I own a call of Apple at 155. Can you please give me the shares? So what they'll do is they'll say, here's 100 shares. They take the money out of your account. So the person that sold you that call, yes, there is another person on the other end, must deliver shares somewhere. Hopefully they own them. If not, they're getting squeezed. You hear a short squeeze? Somebody who says, I'll get you shares. And then the stock rallies and you say, give me the shares. And they go, oh, shoot, I got to go get shares. So they go back and they have to outbid everybody else because they're losing money for as long as the stock is rallying. That's what happened to GME. That's how people went bankrupt. So these are the calls. So now we have an idea of puts and calls. So the question was, how reliable is this information? Right? That was the question. Forgot your name. I'm sorry. I'm old. Ron and Eric. So how reliable is this information? It's as reliable as the statistics they come with. So statistically viable statements. They're not foolproof. If they were, there would be no reward because there'd be no risk. So we are taking on some risk by using that information. But it's, guess what? Better than nothing. I'll give you an example. So people say options are way more risky than shares. No, than buying shares. They can be. Sorry about that. They can be, but not necessarily, because if you use them, if you don't use them with caution, they have the ability to lose you money faster because they can make you money faster. I'll share a couple of examples where they're absolutely safer than buying shares outright. But the statistics are reliable, but not foolproof. So for example, I used Apple as an example earlier. Like how much can you rely on it? It's very low chance that Apple will be at 180. Well, let's talk through it. Let's talk through it. Currently, Apple is 154. You decide you want to buy shares. What gives you the impression that you're right, that you buy shares? You're going to spend 100 shares times $150. You're spending a pile of money right here based on the assumption that you think you're better than the person selling you the shares. He or she thinks you're an idiot or you're making a mistake. You think they're making a mistake. Between the two of you, you have a market. One is bearish, one is bullish. Whoop, transaction happens. Now you sit and wait. Now you thought what you thought, and you're sitting on a coin flip. The stock can rally, the stock can fall. Okay, so, but part of your thesis is that you think that Apple is going to 180, right? So you think that Apple is going to 180. I can tell you that it's not likely going to 180 in 38 days. So let me share why that is. This table here shows you what the market makers, who rarely, if not ever, lose money, right? They manipulate the market. It's a rigged game. So it's a well-organized game. So you can kind of guess what they're thinking, because they're not going to give you money free. So for example, 180, I use the number 180. This is 180. This is 38 days. So let's walk through it. Let's go with 200. 195, 200. This number, this column right here, there's a whole bunch of columns. Don't worry about it. This column is your odds, delta. That's your odds maker. It has a fancy definition. I promise you, if you read the definition and think about it for a month, you couldn't come up with how to use it. It says the amount of money this will change with the change of $1 of the underlying. So basically, how will the contract change with a change of $1 in the underlying? Not very useful definition. It's the odds maker. I'll prove it to you. Apple is 155, right there. It's 50.5. I go to the puts, it's 0.5. That's my coin flip. The buyer and the seller of this thing and that thing are at equal footing. They are 50-50. Check it out. The higher I go, the smaller the number, right? So this is literally saying that 195, Apple in 38 days, almost no chance. 0.02, not even 0.2, 0.02. So there's not even like a 3% chance Apple will be at 195 in 38 days. That's how I use this. So walk down, the odds increase as you're walking down. You get to 180. Did I say 180? It's still in the single digits. So it's not even a 10% chance. Now we get into the 20, 30% chance. Now we're coin flip. So if you tell me you think Apple's going to be at 180 in 38 days, I'd say the odds are against it. So now you have information. It's not foolproof. We could have Apple releases e-car. They're going to sell 100,000. They already have booked 3,000. Apple goes to 200 in an instant, but that's an unusual occurrence. Everything else held equal, with all the knowledge we know, there's no event between here and there. There's no earnings between now and the middle of 38 days. The odds are against it. So do I get long Apple expecting 180? Then I'm hoping too much. If I use options and I pay this to be long Apple with that tool, I'm throwing my money away with very little odds of success. That's why it's cheap. That's why it's 50 cents. That's why it's 11 cents up here. So look how expensive they are down here. Why? Because there's almost no chance Apple is going to be below 118 in 38 days either. Look, that number is almost one. So it's almost a 100% chance this guy, Apple, will be above this in 38 days. That's what this says. Almost no chance, almost a guarantee. Almost no chance, almost a guarantee. Okay, so that's your odds maker. Even if you don't trade options, jump in here and see how realistic your expectations. Oh, I think Upstart's going to rally back to whatever. Oh, you pop in here, you get a number. That whatever is X%. Is that gem with your thought? So this is an easy way of using information from the options chain without having to trade options. Use the delta column on the call side to see if your optimism is correct. Use the delta column on the put side if you want to see how likely is a drop. For example, I told you there's almost a guarantee that Apple will be above 118. Look, the tiny number on the put side. Yeah, that's because there's almost no chance Apple's going to be down there. That put is 59 cents, just like this one is. This one is way more expensive than this one. So the body language is bearish in this options chain. How do I know where the better odds are? Well, the higher the number, the better it is, but the more expensive you want to spend out of your pocket. So this is where you develop your system. I'll tell you mine. If I'm buying options, I like odds in my favor, but not too much. So I like to buy something in the 0.3 delta. If I'm buying calls, I want it to be somewhere in the middle between these two. So I wouldn't buy this one, that's too low, that's too high, somewhere in between these two. So I may have to change times where they have more legs. They add legs, like they add 250 in between, sometimes single legs too. So you will find your own. I'll give you mine as we go along, but you will find your own. There's not one rule that's foolproof. Look, there are thousands out there. So clearly different people have different styles, right? So I'll tell you what I do, and I'll tell you how I win. The headline says how to win 90%. Okay, so let's back up. If you've ever taken an options class before, what have you heard almost every time, if not in the first 5 minutes? What have you heard? I'll give you a second to think about it, and then I'll tell you the answer. I don't want to put you on the spot. You've heard somebody say, most options, can you finish that statement? You may have already said it, and I didn't say it. Most options expire worthless. Yes, thank you, Martin. Most options expire worthless, right? So why on earth would I want to be buying them? Does that make sense? Most of them lose. Why? Because the house almost always wins. The market makers. If the house didn't win, there wouldn't be options. Therefore, you must learn to play within the rules. There is a way to go to the casino and you win and the house wins. You just need to learn how to play like a market maker, like the casino. So don't buy more than you sell, and don't sell risky stuff, and don't buy crap. Put the odds in your favor. When you're buying stuff, buying calls, buying puts, where you need the moves to happen in your favor, buy realistic winning odds. When you're selling stuff where you are the house, you want to sell losing stuff for other people. You want to say, hey, you love Apple? Let me see, how far do you love it? I don't think it's going to get there. Yeah, I'll sell you that lottery ticket. And they lose money. Oh, what? You think Apple's going to fall to 120? I don't think so. I'll sell you that lottery ticket. They lose. So you be the house. That's how you win 90% of the time. When you set up your trade to have 90% odds, you win. Last week, I had a whole bunch of trades that were under fire, but because I sold them with 90% odds, they survived. So at some point during the week, I've gotten people, oh, what have you done with your trade? It's under fire. I was like, nothing. It's still statistically viable to win by Friday. Boom, they won. In fact, I closed them early. I said, there's a few hours left. It's 5 cents to close the trade. Guess what? I'm taking it off. There's no sense of keeping the risk on for a few hours just to try to eke out $50. Nope, I'm out. Or $10, depends on the size of the trade. So the secret to being successful at a 90% rate is to set up your trades with a 90% chance of success. So everything I sell, credit spreads, have high degree of success. I'll bring you an example, an extreme example to illustrate. So if you bear with me here, let me see, Jonathan, if you have something to say about this service, or if you've been answering questions, I see. Ideal length of favorite put credit spread. Okay, so Rahul, about 3 weeks. So somebody's asking me, how fast do I trade? I'm so busy during the day. I made a mistake on Friday that cost me $418 in 30 seconds. I kid you not. I placed an order, and as soon as I hit send, because I was talking to 318 people, I was like, oh no. Oh, by the time I reversed it, it was 400 and whatever dollar in like, I don't know, 10 seconds. By the time it took me to flip it back up. So I like 3 weeks. Why? If something goes wrong, I have time to fix it. I have time to react. When you do a credit spread during the week and it's expiring soon and something goes wrong, you can't fix it. It goes to maximum loss right away, pretty quickly. Let's see here.
I will hop in here really quick.
Go ahead. It's your show.
Well, so people are asking about, how they can get more info, more about this subject, trading with Nic, and I'll cover more about the options mentorship program at the end here. We're really digging into some, you can't skip around this. This is so important, but you can trade live with Nic every day in the live trading room. He shares specific trades, and I'll show you where to find all of that. I will share links in the chat room here on the webinar for 50% off of the whole year of the options mentorship plan. You get Benzinga Pro with that. I'll show you what that is later. And you get a free laptop. And if you don't want the laptop, I'll give you an extra $200 off. So I'll throw in 2 different links, one with a free laptop, one with no laptop. So yeah, it'll save you around like $1,600 for the whole year. And the main idea here is that you can trade with a community. Nic he bends over backwards to add value for his community. He goes way, way far above and beyond what is expected of him. So you can ask him questions every day along with those 318 other people, as well as get his specific picks and then also his weekend. He does a charting session for 2.5 hours on Sundays and gives you a spreadsheet with all of those notes. So I'll show you that in another like half an hour here. I don't want to take up too much time, but follow those links in the chat. And we only have 10 laptops today, so don't miss out on those, because when those are gone, they're gone. All right, that's my, 60-second spiel.
Okay, so thank you for that. That's amazing. If you don't want the laptop, take it and donate it to somebody who could use it to further their career or their schooling. Just pay it forward. Okay, so Gurish is asking a legitimate question. Let's see here. I'm scalping. What is a valuable buy option in the money? So if the question is, what kind of an option should I buy? Way out or way in the money? So it depends on your goal. If you're scalping, meaning you're in and out intraday, it doesn't really matter if you're close to the money, because if you catch a move, you're going to get the benefit right away. It is a calculated risk. I do it. Everybody does it. So when you're active, so it's not as important in the money or out of the money. I like to, if it's something I want to hold for a few weeks, I like it closer to the money than out, so I can sell covered things against it. It's complicated, but that's the reason. One of the reasons why closer to the money is better. Another reason, when you've heard, if you watch CNBC, I won't hate you for it yet. And you listen to Kramer, which I think he still says it probably from years ago. In the money calls leaps, I think he says in the money leaps or something like that, which means instead of buying shares and you have to put a lot of money out of pocket, you buy leaps, like calls way out in time and way in the money. Why? Because remember that delta I said about earlier, that, come on, the delta is high, so it acts like a stock. So the higher the delta, if the delta is 1, whatever happens to the stock in theory should happen to that call. So what does that mean? That means that option is no longer as dangerous as options are, because if the delta is low, then the option is all extrinsic. So it's all like, it's got more energy. So a 1% move in the stock, you'll see a 20% benefit in the option. But guess what? A 1 drop in the stock, you'll lose 20% of your money in a day or an hour. right? But if you have a very, very high delta, like way in the money, like this one, then the stock and the delta will move kind of in the same. For example, 100 Tesla, it's amazing. Tesla was up 164 on bad news, right? Aren't they having some sort of an issue in China with lockdowns and stuff? So anyway, that's a bullish statement. So the stock was up 1.64%. The option was up barely more than that. I'm going to tell you the numbers like for this week and see how they compare. So if you bought the calls for this week, you're up like 6 or 7%. So you see it's check that. Hold on. What is that stuff? Yeah. So it's a amplified effect, shorter term and higher end. So I brought this picture on purpose, and I brought it for September, and I brought it for 129 days, and I'm showing you 300 prices to illustrate a ridiculous statement, to demystify the fact that options are more risky than stocks. So somebody will pay you $1,000 if you will buy their Tesla shares at $352. Yes, you heard me right. $352. Somebody will pay you $1,000 today to buy their shares at any of these prices. That's what these numbers mean. The put, and look, there are 1,300 of them down there. There's 6,000 of them down here. So it's not out of the question. Market makers are allowing for that to happen. There's very little chance. Look at the delta. There's very little chance that somebody would pay you $1,000 to take their shares at that price. Wouldn't you love to get paid $1,000 to own 100 shares of Tesla? Whoops, what happened here? Of Tesla down there? I would. So I know what the next comment is going to be. Oh, but it ties up so much margin. Well, it ties up less margin than the cash you're going to spend to buy the 100 shares of Tesla out front. Yeah, it does tie up margin. Why shouldn't it? You're committing to buying shares. It ties up less money than you need to buy the shares. So this is an extreme example to illustrate the point of options. I want to make bets that are sure things almost. There's no sure thing. There wouldn't be any payout. But this is pretty freaking safe, right? Safe. For example, can somebody do the math? What is the drop on this one? 5 on 800. What is that? That's a giant drop. So for me to lose money on that deal, Tesla would have to collapse. It would have to collapse, which means that it's not going to do it on its own, which means the stock market has to collapse, which is possible. Global war will do it, but unlikely. Ceteris paribus, as they say it, I think. So everything held equal, with the crap news that we have now, it's unlikely, but it is a possibility. However, 90% or better, the odds are in my favor if I sell that put. What if I cannot buy the shares? Then I would sell a put spread. I don't want to get too wonky about it, but I'll sell something down here that has a limited amount of risk. So it could work with a $10,000 account or a $5,000 account versus just a plain sold naked put. In my case, I wouldn't go to September. That's just way too long for me, unless I'm selling a naked put. So if somebody has a big account and wants to catch the falling knife in Tesla on the day Tesla is falling 30%, like the other day, it fell a bundle, right? I sold a put spread and I shared it with the team. Then Tesla stabilized and bounced and the trade's fine. So I can do the same if I had a big account. It's so easy to just sell a put on a really bad day on some stupid headline. And then the next day they stabilize, I buy it back for a 30, 40% scalp. I didn't even have to worry about it. And the put could be like 40% below current price. That's just one ridiculous way. This platform here is from E-Trade. I am not recommending it. It's full of bugs, but it is good for explanation purposes. What's the difference between this and inner? Oh, it's the content is the same. You get the Pro with this one, I think. Do they? Anyway, Jonathan will answer.
Correct. Yeah, this one also comes with Benzinga Pro.
So today I needed the Pro. I needed to know what the hell happened to SoFi. Like, what is going on? You've got one job: release the statement at X hours. That's your job, and you messed that up. What is that? Would I do a spread on Upstart now since it fell so bad? Rahul, I bought shares and I sold covered calls. So no, I could. I mean, the company is still viable. It's just the punishment is amazing. I have never seen a drop this big on a company that increased its sales, 150%? 150%, something like that. So the increase in sales was massive just because they guided softer going forward. They're punishing it. That's amazing. So you're going to have to do homework and find out, is the lending market going to dry up because of Powell? That's pretty scary stuff. Do you have a service where someone manages options on your behalf? I don't manage people's options. I do help you manage. I would tell you what I would do with my options if I had your same ones. I don't actively manage yours. No bueno. Can this drop for Tesla, including the split? Can this drop? So when I have options positions in a stock that splits, they adjust the counts. So if I have one contract and it splits 4 for 1, I would have 4. The price doesn't. They split the price too, so it's potato. The only bummer about it is if you have a large position, which I can't imagine anybody would at Tesla, you would end up with a lot of contracts to close. That happened to me years and years ago with CRM, I believe, split 3 for 1, and I'm talking years ago. And I ended up having to close hundreds and hundreds of contracts because I had a good sized position, and then they split 3 for 1 or 5 for 1. I can't remember. So it was a bummer because back then it wasn't free to close. So it was costly to close the position. This one, Lelaine, I just said it is E-Trade. This one, it started as Trade Monster from the Pony Hair Boys, Nigerian brothers. It was great, but it was Flash based, and then they changed it to HTML5, and then it sucked. So let's recap. We've established the fact that it's probably funner to sell options than to buy them, but I don't recommend you go out and sell Tesla. I am not recommending you go sell this option, especially if you've never done it. Tesla is a fast mover. Selling options willy-nilly is scary when the markets are teetering. When you have world war, selling spreads is way safer because you have a limited amount of money that you could lose and no more. So there's a lot of nuance that people need to respect. You can't just jump in and start swimming. So usually when somebody joins the group, I say, by the way, I don't have it on here. Oh, maybe I can. Let me see here. I'll do it while I'm talking. I do have a whole page of resources of videos. BZV. God, I love this program. Getting started. So let me see if I can bring it in here. Yes, that worked. Okay. I have a whole bunch of evergreen videos for members. They log in. What's an option? What is a call? What is a put? What is a spread? What is a credit spread? The table, what I use to write up, I usually share 4 different ways of trading something. How to book a loss, how to book a profit, the difference between cash settled and not, swing trading, breakouts, what type of trade is the best, how to pick. So we keep adding to it. What's an iron condor? So it's important to know as much as you can.
And just really quick, we're getting a lot of specific questions in the Q&A. If we have time to get to those, we will.
Let's
go. Like Soyeon Shin is asking, and just to preface this, It's unlimited, especially these types of questions. So Young, this is exactly what the chat room is for. So they say, hi, last week I bought NVIDIA 250 calls expiring on May 20th at around 20 cents when the stock price was 190, but it dropped to 70 cents today. Would you sell this call ASAP or roll it over to next week? And yeah, that's it for that question.
Sure, let's tackle that question. So here's the thing, though. What was it? I can't remember. You said it. What was the call? Did they say what it was?
NVIDIA 250 calls on May 20
for next week. Okay, so learning what we just learned. 220. So I'll have to climb up. The delta on that. This is where I would say, what's the delta? And if I hear typing in the background or dead silence, it means that they need to learn to look for the delta. They can have the answer themselves. The delta is 0.04. So there is what? Very little chance you're going to get salvaged. However, I believe they report earnings. Is that after or before? No, that's after. Okay. So that call is just about dead without a miracle. So now looking at this pattern, technically speaking, it could pop to here with some resistance at 200. So my advice when somebody gets in trouble, I have when the VIX is this high, I have something that is like almost religious. You have to practice your ABCs. ABCs. What is that? It's the ABCs of high VIX trading. When I get a rally, let's say this person gets a rally, you should A, look to buy insurance if you need it. In this case, that's not what we're talking about. B, book your profits faster than normal. In this case, that's not what we're talking about. Today, I practiced B. C, close a problem trade. So this is a problem trade. Your goal here is no longer to make money, but to get out with little damage. So if you do get a rally next week, or today, tomorrow, or the day after, you should consider exiting at a loss, but at a less loss than now. Because, okay, you have 10 days to get there, but practice your ABCs. So be looking for that C part, closing problem trades on relief rallies. So tomorrow we get the CPI, the all-important CPI. It's not that important. So if you get a bounce to 200, you're going to find sellers. You're going to find sellers at 187 and 200, 204. You can probably see it better here. Let's take it to regular trading hours. Okay. So you can see this guy right there. Sounds like an Instagram meme. See this guy right there, sellers, that's where they're hiding. More of them hiding over here. So if you get to 204, count yourself lucky. Count yourself lucky. Yeah, you can get to here, but you get to 204, man, I would be exiting so fast. Even though you take out 204, you could most definitely get to 220 or 230. This is where you decide, I'm okay risking it. Now, the pattern lends itself to a pop, a big pop, especially going into earnings, especially after a big correction. But you need the market to help you out. Diagonal spread. I love it, Martin. Yes, I can talk about it. Somebody's asking about diagonal spread. Net delta. What do you mean by net delta option? Net delta in options. There's no net delta. The delta. There's a column called the delta. That's your odds maker, David. You can back up this video when they share it with you. I don't want to take. So basically the delta, if it's 0.5, look at current price. You look at the call at current price and the put at current price. You'll see that the delta is about 0.5, 0.45, 0.55, coin flip, 0.5, 50%. You step away from current price, you start dropping. Okay. Question about diagonals, right? Isn't that what you said? Diagonals. Okay. I'll give you a quick lesson on spreads. I know it sounds complicated. Trust me, it's not. I did a couple of videos on spreads last week, and they were both winning trades. Roku was one. Earnings report, I said, I wouldn't buy naked calls because when there's something going on in an option, there's something called implied volatility. You'll see it. It's a column. You don't have to look it up. It's right there. It's basically how nervous is the market about this particular week. And if somebody's reporting earnings, the implied volatility is through the roof. Let's see, who is reporting earnings tonight? Who fell after hours? Coin. Okay, so here's Coinbase. I did have a piece of paper in here, did I not? Maybe not here. Who else other than Coin? Come on, Unity. Oh, where is the paper? Who else? I know. I have a cheat sheet here. There it is. So, oh, Roblox. Okay, so RBLX. There it is. Yes. Okay, so this is a diagonal. Ask and ye shall receive. No, this is a diagonal right there. So this is Roblox. They reported earnings after hours. They're probably falling. Yep, 3 or 4%. That's the new up, by the way. Unity is getting shellacked. So this contract is for Friday. It has 3 days on it. This contract is 17 days, May 27th. Why did I go there? I went there because this is Roblox today. I went there because of this column right there. Implied volatility. These are calls. These are puts. The implied volatility for this week, look at it. That's this week, 354%. That is so much more than normal. The implied volatility 2 weeks out, the one I chose, 17 days, is almost half. So what does that mean? If I buy anything here, I'm paying one going rate. If I buy anything here, I'm paying double the going rate. So it doesn't make sense for somebody to buy options here to say, oh, I think it's going to go up, I'm going to buy calls. Well, if you buy calls the next morning, like tomorrow, when this market opens, this will drop to 200 like that. So almost half your money will disappear. Both sides, calls, puts, I don't care. Winning, losing, they will just get crushed, creamed. You would lose almost 40% of your money just at the open, just because the bell rings, oof, the money's gone. So that's not the case here. You will lose here from the open, but not nearly as much. So what did I suggest? I suggest if somebody wanted to bet up on Roblox, they would buy one that's 2 weeks out. Look, it costs $2. So that's $200. I could have collected, if this was the 28th call, you see it, 28th call. If I sold the 28th call, I could have collected $1.60. So $160 for 3 days. So the total trade would have been 40 cents. So one contract, $40. That's it. And I'd be bullish this stock. This would have been a calendar. If I did 28 and 28, it's called a calendar spread. Because I said I would do the 28 and sell the 29, it's called a diagonal spread. And now I can explain to you how that works. What's a calendar? What's a diagonal? Okay, reset. Okay. Quickly. Too late, Nick. So if I bought the call 2 weeks out at 28, and then I sold the call above it, that's called a spread, a vertical spread. Debit call, vertical spread. It's calls, it's vertical, and it's a spread. I buy one, I sell one. I'm spreading my risk. The calendar is, instead of, I buy this one still, but instead of selling it in the same time frame, I move it to this week. I sell it this week. This is called a calendar spread. Why? Because I'm jumping calendars. I buy one out in time, I sell one closer in time. This is called a calendar spread. Now, if I sell it higher and closer in time, now it becomes a diagonal. Why? Because it looks like a diagonal. So we have vertical if I sell it up this way. It is called a calendar spread if I sell it this way and same level. It is called a diagonal spread if I sell it this way and up a level. It can be down a level, but that's a completely different ballgame. So that's a quick lesson on diagonals. They work in this instance. Why? Because of the differential of the fear. Everybody's nervous. What is happening? Okay. Everybody's nervous about the earnings. So this is way too expensive. You don't buy this stuff. So I did this with Roku and the stock rallied. This call didn't make me money, but the fact that I did both, I made money. It was like a double because this one was so overpriced that this one died much faster than this one. So the net effect was I made money even though both legs lost. So it was pretty fun. And we did it on puts in something else, and I can't remember what it is. Zillow. I suggested I was going to take a put calendar or diagonal. I can't remember. It was too staggered. I bought a put out in time and I sold the put for the week that Zillow was reporting, and the implied volatility was extraordinarily high. And that made money. So that is a diagonal. Boom. Delta is a measurement of risk. Delta is a measurement of, it is my odds maker. That's the easiest way to explain it. You have a definition of delta. It's how much it moves with the move of $1 of the underlying, the options contract price. So I am familiar with the firm. Trust me, you named the ticker, I'm familiar with it. I review 150 a week in a large table with 2-hour video. So yeah, I am familiar. The delta, the simplest way to make it, it's the odds maker. It's the odds maker. Look, this was current price at the time. It's 0.5. So think about it is my odds of success are the delta. If I'm buying a delta that's 0.02, I have no chance of winning, very little chance of winning. Therefore, I want to be selling those odds. Okay, back to Tesla, where were we? Where I put the paste. Anyway, familiar with the firm? Yes, Xavier. What's your question about a firm? Should you be high seller of high volatility stocks? Interesting, Martin. There are certain sectors I avoid, like biotech. Every day is like an earnings report. You never know where the headline comes out. No, I understand. I know what you meant. I avoid biotech because you get these failed whatever, boom, 90% down. There's nothing you can do about it. Tesla June 810 put has a positive delta. What does that mean? A put has a positive delta? That's impossible. Tesla, let's go and look at your, means a glitch in the system. I'm just kidding. June 17th, 870 put. Whoa, my computer is bugging out on me. $810 put. It doesn't have a positive delta. Where are you reading? You're looking left. You look on the right side. It's a minus 0.47. It's a coin flip. So here's why. Okay, all the deltas on, you just take the absolute value because all the deltas on the put side, on the right side of the equation. What ticker did I have up here that I had all those things? Was it Apple? I had the delta anyway. Bummer, I can't remember. Roblox? No. Before we talked about that, anyway. So all the deltas on the put side are minus because of the definition of the delta. The definition of the delta is what happens to that option price when the price in the stock moves. So if the stock moves up $1, the put option drops. That's why the delta is negative. It drops by that much. So, and vice versa. If the price moves, the call option rises. That's why the delta is positive on the call side. So ignore the negative sign and the plus sign. The absolute value of the delta goes from 50 cents to 0. On the put side, it goes from 50 cents to 0. On the call side, it goes from 50 cents to 0. So your delta that you mentioned at 810 is just above current price. So it's about a coin flip. That's why it's 0.47 minus 0.47, but it doesn't matter, minus. It just denotes that it's a put option. Earnings today, and wondering, a firm doesn't have earnings today. You're thinking SoFi? I think you're thinking SoFi. A firm did not report earnings today. Oh, that's not what I wanted. SPX. I'll tell you who reported earnings today. Oh, I have a cheat sheet. There it is. SoFi. There's no Affirm. Rocket, Matterport, Win, Unity, Coinbase, Trade Desk, Oxy, Roblox, and SoFi. SoFi actually leaked their earnings during the day. I mean, what are you doing, people? It's not that hard. Got one job. Then tomorrow we have, looks like Fiverr. I can't read it. Yeti, Fiverr, EVgo, Krispy Kreme, PaySafe, Wendy's. Okay, you want to debate Roe versus Wade here? Wrong platform, friend. That's a first. I have to hand it to you. That is an absolute first. Okay. Yeah, option. You and me, David. No, I am not discussing any of that. Martin, leave early. Hey, listen, if you like trading, let's finish this conversation somewhere else. Options, not opinions. Yes. Hey, I'm going to use that, Chris. Is that okay? I don't know what your question is. I don't understand your question. You can, I'm a foreigner, so this is my third and a half language. So if you want to rephrase, get really and read. I don't understand that either. So you please don't join. I beg you, do not join. You and I are not going to get along.
I remove them.
Yeah.
We're very patient people, but
oh my God, that is funny. Okay. What distance on strike prices do you take on your spreads? Okay, that's a great question. Let me address that. Gabe, that's an awesome question. So, God, that is the first. That's hilarious. So the question is, God, I can't remember where I put that, so I'll bring it. On options, there's spreads. I mentioned I buy a spread and I sell a spread. They're asking how big, how wide. So when I'm selling contracts, so when I'm selling a credit put spread, it's also called a bull put spread or a credit call spread, which is a bear call spread. I like to keep them no more wider than $5. So it's my personal preference. It's not a rule that you should follow. I think you should, because it makes them easier to manage, especially around expiration and if they're under fire. If I take a $10 wide spread or bigger, then let's say it's 3-4 hours to go in the expiration or a day or two to go, and price is kind of close. So the one I sold where the risk lies is hot, and the other one is so far behind that it's not even helping anymore. So I might as well be selling a naked put or a call. So I make the analogy, I grew up in the war, so I always go back to war stuff. Let's say you're in the trenches and you have a medic that's 3 trenches behind you. They can't come and help you if you're injured because you're under fire. So a very wide credit spread, the risk is in the leg you sell, which is under fire. The other leg can't help, it's too far back. So $5 wide, that's the maximum when I sell. When I buy options, I don't mind having a $10 wide. In fact, I prefer it. A $10 wide spread that costs about $3.40. Trust me, that's the sweet spot for me. It's this much away from a coin flip, but not too far. So it's as good as it gets. And it has a lot of bang for the buck if you get the direction right. And if you get a couple of bad days, you can still withstand the heat and still have a reasonable odds of success. So if you, whatever the ticker is, whatever the time is, if you hunt a ticker that's $10 wide debit spread that costs about $3.20, $3.40, that's a sweet spot for me. I don't even need to tell you what it is. You can go hunt it and you'll come to the right spot. Okay, do I have a rule on percent ROR? Yeah, I do. Chris, I think I like the questions. So we have pretty smart questions. I don't know where you got these people. Spot on, and high five, Jonathan. So we're getting some pretty smart on the button questions. Are they plants?
Right. I'll pay you later, Chris. No, but these are great questions.
Okay, no, seriously. So I think you're going to have a good time if you join it. I guarantee it. I guarantee you will become a better trader. Okay, wait, the best part. I'll tell you why I guarantee it. Don't take my word, take my people's word. So to answer your question, yes, Chris, it's the opposite. I ask less. If I'm getting rewarded 33%, I'm leery. I've yet to meet an easy 33% trade. I want easy trades. So if I set up a credit spread that pays me 40%, I'm asking for trouble. I'm asking for drama. Yeah, it could work out. Yeah, it risks less money. Yeah, the win is bigger, but it's not going to be easy. When I'm selling spreads, I like boring. Boring, that means I want between 12 and 18% yield on my risk. That's it. But it's consistent. That's how you get to 90, 88, 92% success ratio. Because if you ask for 33%, you can't expect a fault of only 8 to 12%, right? It doesn't work like that. It's math. It's not opinion. It's a matter of math. The statistics come out what they are. So let me show you some stuff. I think they have them here. So this is all from today. So I'm not lying. This is today. This is 250 people. I don't know if that time is right. This is Jitsi. This is my screen. This is the people that are in there. These are the comments. Late in the day, 80%, thanks, Nick. That was the SPX late in the day. Mafi, I call him. He's been with me, I don't know, 6 years, maybe. He knows what to do. He just likes the camaraderie, and he does better when he's here. Boring, yeah. All right, Stephen, 100% win. I made 170 on this one because I actually took the trade to see if it's there, and they jumped in. Hey, John. Got in later, he booked 50%. Dwight says, sandwiches for all. I know for a fact that Dwight was chatting, and he had a couple of runs today. Booked 110, Persia. Persia had a question, a very detailed question, like minutes before or after, I can't remember, about a spread. So Persia has a credit spread on Tesla. Tesla, I think so, expiring this week. And Persia said, I have a credit put spread, and it's far away from the money. Why isn't it more profitable? I think it was Google, G-O-O-G. Why isn't it more profitable? I said, yes, it's still priced at $1.80 because you're still within a high delta. The delta they sold is 0.35. So that's still within reach. You know, one bad move and boom, you're there. So it's still priced high. I said, you could come out on top. So we had a discussion, a long discussion about one particular trade they had for this week. So yeah, I didn't manage your account, but I opined on it. So what happened here? 251. Okay, that's Mafi. Okay, we got that. 60% profit from Yams. Funny name. 270 people at the time. I don't know what that is. I don't know. This is somebody asking about AA. Linda crushing it today. She's posting her trades. Short Google, short Amazon in the morning, had a great run. Long this, long that, had a great run. Short this, got stopped out with a scratch. She's sharing her trades. Other people share their trades. It's a beautiful place. So this was my forecast. And later on, it played out exactly to my forecast. And thanks for those lines. And just snagged 20%. But hold on. This also we discussed setups on Thinkorswim, like how do I set up my, okay, this is the best one. Ryan says, Megan Noob, Ryan says something else. Oh, yeah. We were talking about things that pay for themselves, about tools. I said there are a couple of tools I would pay for. And then Ryan comes in, things, something else that pays for itself being here. Those are his words, not mine. And everybody goes to say that. So the point is education, camaraderie, trade sharing, idea sharing, looking out for breakouts, looking out for pitfall. Ryan is sharing his trades overnight and he's been spot on like a machine. Somebody made a bundle, they bought puts in Upstart. Private messages. Mary, happiest trader on the planet, booked some money on that. So this happens all day. So what, oh, there they are. I was looking for this. I promise you, you won't be disappointed. And in fact, if you are, Benzinga promises you your money back. Could I take a look at TMDX? We can do a segment of tickers, yes. Is there a trial period? No, no trial, Nasir. No, I'll tell you why. When I do a trial that's free, I don't give it a shot. I keep saying this because it's so true. There's a platform out there called Symbolic. It's the TD countdown person. I forgot his name. He gave me a free trial. I didn't pay anything. I was just free trial. I logged in to log in the first time and never logged in again. And then my free trial went up. 2 weeks, I didn't touch it. So now, had I used my credit card to even pay 50 cents, I would have used it. I would have been diligent with it. So I suggest that if you're serious about investing with a fun group that strive to learning, I'm learning new tricks and new tools, and I'm sharing them, and people are picking them up. I've taught myself harmonics and a couple of other systems that I didn't know before, just because I had users that were good at them and I needed to speak their language. So they're part of our thing now. The level that is in the group spans the gamut from beginner to super good. So I'll tell you, if you're a beginner and don't know anything about options, and you just want to be super strong with charts, or you just want somebody on call for your charts, you get that benefit like right away. Every day, every week, you have full review of your charts, full, unlimited. I don't stop anyone. I don't diss anyone. Everybody gets their questions answered. I'm pretty darn good with charts. I'm not from Wall Street. I'm an engineer. I figured this stuff out. I promise you I can put my skills on charting against anybody. So you get the charts right away. Now, what else do you get? You get all the videos for learning on options right away. So this is your starting point. You go into the video, you don't let one word go by that you don't understand. If you have a question, you come back, say, I'm watching your video. What does this mean? I don't really get it. Every video I share every day is like 15 minutes long with an explanation on what the trade is from start to finish. Most of them are full lessons by themselves. So you're going to get at least 3 to 4 a week, full-blown videos from start to finish. Imagine seeing full-blown classrooms at your leisure. You can pop in and ask questions at your leisure 24/7. How much is that worth? I can tell you one thing. If I priced it, it wouldn't be nearly as cheap as these people price it. I've been working with Benzinga for a long time, since 2011. So we're doing something right. Give it a shot. They'll give you all your money back, no questions asked. The homework part. My homework? Let me see. Yeah, I can explain it. I'll show you. I don't have to explain it. Hold on.
I have your spreadsheet pulled up too, if that's helpful.
Yeah, I have it. I've got shortcuts. I'll pull it up. Give me a second. So the homework is you ask for the tickers and that you want to see. And I do the homework every day on Saturday. I promise you, it takes freaking hours. because I have to tabulate them and then bring them to share. This is the actual one from this past Sunday, 151 tickers. These are the tickers that the people asked for. It includes crypto, futures, contracts, everything. You see all these? All these are live links. You click on it, you get a chart. There's the comments. There's what kind of trade I would do. Maybe I do. Live for all of them. So these are your tickers. This is 5/8. I didn't change the date. Don't, but I promise you this is 5/8, the name of the file. Anyway, every Sunday there's one of these. Last 2 Sundays ago was longer. Sometimes they're shorter. And this is after me answering all day, every day. Do I teach charting technical analysis? I do. If you watch one day inside my live room, I promise you, you're going to have what? There are just a few aha moments, that are game changers, absolutely game changers. I wonder if I can show you here. So let me see, SPY 1 minute. This is just today. Okay, so this is today. All these lines were drawn on the fly, okay? So we start today fresh, no lines. And then I start putting lines as I see trades. Like I thought this would happen, it didn't happen. Okay, so down here I said, okay, now we have these two. They didn't trigger. So right here is where the action started. Right here. I said, okay, so now we have a neckline. If the neckline is breached, we can get to here. So I can buy the rip or buy the dip into support that was just established. And they dipped and they took it out. And then I drew this. I said, now they start doing these ascending scallops. And one line at a time got us profits. And then QQQ delivered a win because I was watching algo flow. And right here, the algo flow was divergent. You don't need to know what it is. So I said, I see internal reasons to spike in the Qs. And I said, I see a nice clean line in the Qs. So I did this and I did that. I said, you can either buy it and hope for a rally from here and say, if I lose 20%, I'm out, or you wait for the dip and you buy it up here for the breakout. So matter of preference. And this is what happened. Everybody was ready for it. So buy the dip if it happens or buy the rip. I had that and we were waiting and then boom. And then when it got here, Linda said she's shorting Amazon. I said, uh-oh, I wouldn't. It's going to come down. And I put an arrow. Where is it? Okay, right there. I said, I wouldn't. It was here. I said, this is vulnerable. And I pasted it. You can see it, a vulnerable short-term comment only. Look what happened. So yeah, I share line by line, minute by minute, 15 second by 15 second. In the SPY, we went down to 5 seconds at a time today to see the action. Why? Because you get 20 ticks for the other guy's 1 tick. I see 20 ticks when you see 1, if you have a 1 minute chart. So yeah, you see this coming. This does not look like this on the 1 minute chart. Where is it? Gone. 5 seconds. There it is. So trust me.
And really quick, I wanted to welcome Dylan to the program. So we'll see you in the chat room, Dylan. Valerie just joined. Chris joined a little bit earlier, but he's in here as well. So glad to have you.
Bye, Chris. C-R-I-S. Yeah.
So yeah, awesome. So it looks like there's only 7 laptops left. So if you want one of those laptops, make sure you go ahead and use that link. And for all the people with questions about, oh, I already have Pro, how much is it to add on options? Just shoot me an email. I'll look at your account and we'll lock in the same discount for you and prorate it for what you already paid us. So yeah, welcome to everybody who just joined. I need one of those air horn sound things. That would be nice.
David, I think they can work with you on that one. KP, is that my KP? We have a couple KPs in our program. Probably different KP. We'll have to call you a KP3 or 2. No problem. Okay. Somebody asked something. So the chart determines what type of option I trade. Yes, to a degree. If I'm trading a breakout, like if I go to 1 minute, if I'm trading a breakout from this and I want to chase it, yes, I don't sell a put. I just buy a call, an aggressive call, a short dated call because I'm on it. But the same concept works long term. So this could be like a weekly chart where this is going to unfold over the next 3 weeks. I would choose the same method, only it wouldn't be as hasty. I can sell a put spread, I can buy a call spread, I can buy a call, I can sell a put spread and buy a call spread, I can buy shares. I explain all of that. And I share a table. Say, if I sell a put, I do this. If I sell a put spread, I do that. If I buy a call, I do this, but it's not for me. If I buy a call spread, I do that, but it's not for me. I make comments like these. So it depends on the situation. Your long coin, I feel your pain, Evelyn. What do you think it is going to do next week? So, okay, how about Jonathan, is it okay if we open it up to take some tickers so I'm not the blah, blah, blah?
Yeah, absolutely.
Okay.
Yeah.
So I'll start with coin because it's important. Evelyn, you're not alone if you're long coin. I've been telling people not to be long coin, not because I don't like it. I think it's a good company, but because of what I did a video on Bitcoin last year. I'm trying to see which one is it. Coinbase, I think. I don't know under which. There it is. Okay. They come different quotes. So this is Bitcoin with my notes from last year. Somewhere here, I said if Bitcoin loses 44-ish, plus or minus, can get to 20. Everybody lost their mind. I said, I'm not bearish. I want to get into a big position in crypto, so I will plan my day around it. So I said, I will buy my first batch at 33. It fell to 33. I bought my first batch. I got 40%. I said, I will buy my second batch at 28 to 25. Oh, no, today it broke below 30. So yeah, it's almost there. If it gets there, I'll add. If not, I'm already long. So that's good. That's why I said don't go coin, because coin, for some stupid reason, trades with Bitcoin. I mean, that's crazy. So unless they actually hold coins, which I don't think they do, it's like selling Charles Schwab because stocks are falling. That doesn't make sense. So coin has a good P&L. If you look at it, it has a good income statement. Total revenue, 500, 1.38 billion. That's a big jump. And they make money. Net income, I believe, is positive, 3 billion positive. Unless there's something wrong with these data, then there's something wrong. Price to sales is 2, price to earnings is 5 or 6. That's pretty cheap. They're not burning cash. They create $10 billion in cash from operations. So there's nothing wrong on paper with it. So what is going on is it's stuck in the vortex of selling stocks, first of all, they've been falling for months, and selling Bitcoin, which is now also falling with stocks. So it's a double whammy. So here's my, and there's nothing to hit against. It's fresh lows. So the bulls don't have anything. Oh, I'll buy the support. There's no support. It's falling into an abyss. The support is this, the fundamentals. At some point, somebody is going to figure out, it's like, hey, you know what? This thing is worth something. So they reported earnings after hours and they're falling fast. I tomorrow might get long Bitcoin for the long term. Batch one of many. So it is a good company that's stuck in the selling vortex. If you took a full-size position, Evelyn, if I were you, I wouldn't add anything because you don't know anything new now than you did before. We know what the company does, but we don't know why people are selling it so feverishly. I can tell you technically, losing this explained that. Losing this explains this level. Losing this brings into view 40, technically speaking. So we don't know where they want to go with it. it's at the mercy of this vortex is stuck in two of them, one from Bitcoin itself and one from stocks itself. The government is messing around with Bitcoin. They've done some changes behind the scenes. I used to be able to earn 10% on my stablecoin. Now suddenly it's got cut to 3%, and some platforms are not even allowed to pay you. That's how the government is screwing you, by the way. If you love your government, you should hate it, because I love this country, but they want me to be what do they call it? A registered or certified, registered something, accredited, an accredited investor, for me to be able to earn interest on my coins. It used to be, I send money, I get 10%. Now I can't get 10%. And on some platforms, I can't get at all unless I register with the government as an accredited investor. Who are you trying to protect? Anyway, so coin is stuck in this vortex. And it is, there's no information other than we know the company is good. We know the reports are good. Estimates, who cares? It's somebody's opinion. So what is Buffett says something along the lines, I don't know exactly. The estimate tells you a lot about the person doing the estimate, but not the actual company. So I wouldn't add, but I would initiate a starter position, not all in, maybe 1/3, maybe. Okay, so I'm looking at Rahul's SoFi Skills Wish AI app, all the same stock, friend. You're long the same stock. They act the same, and they're all high growth, high spend companies, except for AI. No, AI too. So if I said SoFi, and I'm going to go down here, you see high blue marks, high orange marks. I bet you skills I haven't looked at in a while. SKLZ. High blue, high orange, which means they grow fast, they spend a lot. They're all the same stock. They are out of favor. Wish is its own mess. Oh my God, this company. Are you serious? Speculation on Wish. AI is also speculation. So Palantir just reported, I think they're kind of competitors. Look, high growth, high spend. Palantir, same company. App, is that NetApp? Who is App? No, App. I don't know App. High spend, not high growth, not high spend. That doesn't matter. That looks like PayPal is like this. High growth, no spend. Green, still stuck in the vortex. So this one, falling to a new low, you don't have anything to say, okay, I'm buying support. You don't have a lot of history. You have a lot of, it does not fit the profile that currently investors are liking. So I would avoid it. If I'm long, I do the homework. If the company is good, I stick with it. Nicola, geez, Louise, people, what are you doing? Oh, Stephen, I appreciate it. Oh, yes. Cool. Finals, youngin. Dang. I charge you extra for being that young. I spar for a sport. I spar people your age. That's cool. Riot is stuck in that same vortex. So instead of, I would rather invest in crypto than Riot or Mara, to be honest with you, because it's just more pure, like direct. I don't have junk from the company. Tesla is kicking ass. Nicola is a no touch for me. But it's amazing that Nicola finds a floor and Palantir doesn't. I mean, what in the actual hell is going on, right? So I personally, for my own bucket of money, I do not bet on no income companies. That's my personal preference. There's no income, no touchy. This one loses $1 billion almost, 3/4. No income, nope. Especially when it's that controversial. The first time I saw the guy, I got grossed out. The first guy that got ousted, I forgot his name. And then everybody's talking great about him, and GM did a deal with him. I was, well, maybe I was wrong. Okay, I'll change my mind. So I went long a couple of times. And then this happened. Like, I guess I was right the first time. So, yeah, no, not for me. So I would even go to Lucid before this one, and I don't like Lucid either, just because people are misclassifying it. It's the Tesla killer. It's not even a Neo killer. How could it be the Tesla killer? They can maybe produce maybe 12,000 cars, according to them, a year. Neo produces 70,000 cars a year, 70. This one, yeah, each one is 170,000, the Lucid, but you can't call it a Tesla killer when you're not in even the same league as Tesla. So yeah, it's a niche market. It will sell out every car it makes, but it's not a Tesla killer. It's its own thing. You should be happy it's its own thing. And people ran it up to the moon. Lucid, great car, great tech. They will sell out of everything, no doubt. So invest in it for the long term, no doubt. I think they will fall short on deliveries. And that's the disappointment in the stock, not because now suddenly it's the worst investment. It's the disappointment. It's all about what they promised and what they delivered. Yes, absolutely. They want meat. When the hit the fan, they go to meat. They don't go to froth. Froth goes out the window first. So yeah, I agree. What's Vortex? Vortex is just a whirlwind, like meme movement, wind all in the same direction, momentum, everything is the same. How much, okay, is Amazon in the Vortex? Yes, Amazon deserves it. Amazon is starting to be a good catchable knife, and I would catch it via a bull put spread, also known as a credit put spread. But the problem is, every time I look, it's fallen so fast. There's only $10 and $20 wide spreads. So I'm avoiding it. Yes, funnel. I want to have them bring in new options contracts so I can have $5 wide spreads. Hey, William, thanks. So I encourage you to pop into the chat room if you join, to say hi. I won't be there for a couple of hours, and we'll chat. Ford, I can speak about Ford, and clear me about moving average. Alfred, it's a great tool. We can talk in length offline. If you join, it's an eye opener, moving averages. NVIDIA, great company, too expensive. AMD cheaper, Intel cheapest. I would hold Intel for the long term. Not sexy, but did you know Intel is bigger than NVIDIA and AMD, twice over, 2 times bigger than both of them put together. Gets no respect. I will buy nothing but Intel machines after this. I bought 2 AMD machines and I regret both. I bought a high-end laptop. I bought a high-end machine. I bought the Ryzen 9, 59, whatever. I think it's a graphics. It's got something going on with the graphics. Recession-proof stocks. Government bond that pays you 9.6%. Called the I bond. Yes, Chailendra, I like you. Yeah, 9.6%. I used to get 10% from my crypto. Bastards! They took it away. Disney, I wouldn't touch it. Nope. I don't like when companies go political. Not that I side with this side or the other. It doesn't matter. They threw themselves. I know 2 people that work at Disney. One is right, one is left. One is in the corporate, one is in the trenches, fixes the machines. They don't talk to each other right now. That's how poisonous this thing is. I was like, if you're like this, what's going on in the corporate world? Nope, not touching it. Other than that, it's a new company. It's all about streaming. It's like Netflix back then. I mean, levels wise, it is tradable, Disney. Because there's the earnings, it makes it coin flip over the earnings. Now, if you tell me, hey, there's this stock, forget the earnings, would you be looking to go long or short? I would say, let me look. Oh, intriguing. I could go long here. Why? Because there's harmonics telling me that there's a pattern that shows up often enough that usually there's a rally thereafter towards 128. but you need to get me corroborating evidence. So I opened the RSIs. They're not making worse levels while the stock is falling. So maybe some divergence there. I'll look left. Oh, wait, that is a base from the 2020 debacle. So, okay, maybe I can be brave enough to take half a position long. But then wait, nope, I can't do it. There's earnings coming. I'm short Oxy by owning puts. So here's the thing. Buffett is breaking his own rule. Buffett says, so first of all, Icahn exited his Oxy position, made $1 billion, literally $1 billion. Buffett is now adding to his position. So he has this mantra, everybody quotes him on it. When everybody's greedy, you should be fearful. When everybody's fearful, you should be greedy. He is leading the greed. This stock has never been higher. And has it? No, it has been higher, I guess. Okay, so let's see. When was the last time it was there? 2019 and 2018. Oxy. It's going into prior fails. Okay. Technically speaking, it's not a good time to go in. These are monthly charts. So every tick is a full month. Okay, so we don't know where this is going to end up. So I just don't get it. Because the oil price is high, this stock is rallying out of control. I don't think anything fundamentally changed in the company. So I took a harmless position via put. I bought a put. It cost me this much. I'm sitting on it. I think people that are investing for the midterm, I think they're going to lose money. They can't trade like Buffett. Buffett doesn't buy stocks. He buys companies. So he's accumulating to buy a company. Buffett, half his portfolio is Apple. So he's just trying to diversify. How can I continue with these sessions? You can join the group. We do this all day. Do I consider seasonality in my trade? Yes, I do, but not to a great degree. I think AMD has a very set seasonality. That's probably the only one where I can blindly trade it. I forget the rules, something like buy it at the end of May and hold it through the late or early January or late December, something like that. I have to look it up. AMD has a clear cycle like that. But these days, nothing is normal, Chris. We've never had these conditions before. I talk like this. You see my screens, and I talk like this live every day. Somebody was asking. Michael. Yeah, no. And today, that poor fella, I let him talk. Very rarely do people talk, but today he had so much to say that I said, open up your mic. As an AMD CPU. I did buy an AMD CPU laptop. It cost me, believe it or not, who knew? I haven't bought a laptop in so long. My last one was a Surface, which I love, but it's too small. It's 10-inch screen. So I bought a 17-inch screen, 17.4. HP is the cheapest. I thought it'd be like Gateway or Acer. Nope, HP is the cheapest. So I was happy to buy an HP laptop. It was $900. It wasn't cheap, but it was the cheapest. Touchscreen and everything. Why does Apple not have touchscreen? Why does Apple not have touchscreen? It's a freaking life-changing thing. Can anybody tell me, Appleonians, why does Apple not have touchscreen? That's crazy. I don't know what he meant. Don't care. I don't need him in my room. And buy an iPad. I thought of that as soon as I said it, Raul. It's not childproof. Oh, if Apple everything, it's like, yeah. Overrated. Oh, let's not start that debacle. Apple makes beautiful products. They will never get a dime from me, but they make beautiful products. That's not for me. It's not for me. I'm an Android guy. I'm an engineer. I like to open my machines up and tinker with them. Yeah, I don't like I was going to build my own PC, but then I was like, yeah, you know what? it's going to cost me like $300 less to build my own PC. I'd rather I just bought one. More tickers if possible. Sam. Okay. I haven't done Sam in a while. Whoa, damage. Dang. Wow. Okay. So round trip, back to base, be long. Too late to panic out. If I own it, I'm staying long. If I want to get long, I would sell a put to own it lower, or sell a put spread. It's probably not very liquid. Like, what was that all about? Oh, geez. Good P&L, less profit. Let's see if they bleed cash. They don't, but they should make more money, as much as money as they make cash from operations. So what in a rising rate environment, you have to pay attention to this metric right here. Cash flow from operations. You can't invest in a company, Carvana. So if a company is losing money to grow, that's one thing. But it's losing money and it's burning $4 billion a year. That means it's borrowing to grow. That means if they can't borrow, it's dead. That's why Tesla was almost dead. Now Tesla does 12 billion. It went from burning to 12 billion cash out of its own operations. That was the game changer that people don't understand. They still short it based on Bob Lutz's comments. Oh, funny. No, this is a different company. I used to be a critic of Tesla. They changed their ways. So this company went to 14 billion, and they're still barely positive. I mean, I'm sorry. I switched. I thought that was Sam. Look at the growth here from 130 to 14 billion, and only 350 million in loss. Bull crap. That's accounting, because they are bleeding 4 billion. No, that is not for me. And I said I wouldn't go long. And look what happened to it. Got decimated. Back to base. I still wouldn't touch it. We have them here. I live in Southern California. I pass one on the freeway every so often. What hours is my program? My thoughts on Costco. I'm on the West Coast. I'm here before the market opens. I'm here after market closes. So if the market is open, I'm on. I'll be in Vegas this weekend with the Inner Circle folks. So Costco, I like the company. I like the stock. I don't like the levels. That's a weekly chart. So it's still strong. It's still a lot of places to fall. Technically speaking, you're falling into support. So if you force me, I would take a bullish position by selling some put spreads here. Let me see. Do I have lines? I do. Okay, perfect. So be aware that this is a possibility. Now, how cool is that? You ask about Costco. I'll share this chart with you. I forgot what that was. Anyway, so on the bounce, you have to be aware that this is a possibility. It will face sellers going into 545, guaranteed. It will face sellers. And if it does, what happens on the retest? You lose it, you get a head and shoulders somewhere around here. The target's somewhere down here. Support, support, support. I will buy the dip if it happens. Look, small cluster of support worth. So if it falls to here, I'll be on it like white on rice. Affirm again with Affirm. Yeah, Affirm is going to keep falling until Wall Street changes its mind. Great company, great business. Just Wall Street hates it right now. If I'm long, I don't add. If I own shares, I'll just sit on them. Be big. What is this? Vinco Ventures. I don't know what this is. What do they do? Oh, another one of those. Okay. Technically, it has a roof over it. You have to take out 3.5 and 3.8. You can't do that. You can't do much. Once you take those out, you'll get back into the fives where you'll find resistance.
And we are running a little short on time. Normally, you're the one that has to go, Nick. I actually have another.
I do webinar. Have to go. I just got lost. It was a fun session, fun people. They're talking my language.
Hope you guys sign up. Don't be freeloaders. All right, like there's people that would charge you $1,000 just for this session.
Derek, I'm here all day. You'll hear my voice all day. Look, I've got a soda over here. I've got Bang over there. Coffee over here. Mountain Dew gone. It's out. So I'm here all day for you.
And Joseph, really quick, Joseph on YouTube was wondering where your harmonics are from.
Oh, this is a company called harmonictrader.com. It's Scott Carney. I don't get paid for advertising for them. It costs about $800, but it's a one-time fee. It's worth every penny. And I would pay for two tools. This would be one of them. And if you can't afford it, you can come ask me every 10 minutes. What about this one? What about that one?
Awesome. Well, yeah, Nic, I mean, you, as usual, you went above and beyond for everyone here.
I got an invite to Dubai. Hey, أنا بحكي عربي. بقدر أحكي عربي بدبي. إذا أنت بتحكي عربي أنا بحكي كمان.
I should have kept learning Arabic. I took like 2 semesters.
No, you don't want to learn Arabic.
I was writing it and everything.
It's
took
so
2
complicated.
But yeah. So anyways, everyone, sign up, get in the chat room, get the swing trade picks. You can do this with an account as small as $2,000. A lot of these spreads you could do with like 50 to 200 bucks.
Even if you can't trade right now, it's very cheap year-long school with potential profits along the way.
We're charging you like 2 college credits, maybe 2 to 6 college credits, depending on what type of college. But like it's crazy. So yeah, sign up. I want to show you just really quick what it looks like when you do sign up. So I'm just opening up the checkout page here, and I'm gonna share it really quick. Boom. Click on the link in the chat, and it's gonna look like this. And you can see that the coupon code will be pre-applied. It's $16.83 for the whole year. And then you just throw in your credit card info or PayPal info and you're good to go. There's a 7-day money back guarantee. So if you decide that we smell bad or something, we'll give you a full refund.
Hey, speak for yourself.
Yeah. I'm the only one that smells bad. Nic is squeaky clean. But it's a no-brainer, guys. I mean, you saw from those testimonials that Nic shared. I mean, 1 trade, 2 trades, 3 trades would pay for this entire year's program. So, and you're building a skill set that's
the part that I think the learning is the selling point. I don't consider myself a trade alert service. I consider myself, how the hell can I learn to beat these moes on Wall Street? They use jargon. They try to muscle us out, but it's plain simple English. It's contracts. There's a buyer, there's a seller. Shake hands. Use common logic. Use skills like charting, because machines control the action. See, they gave the controls to the machines. Well, us math people and geometry people say, "Oh, we can do this. We know your language, so we figure it out." It's very intuitive. And if you don't know how to do it, join a group that does. I promise you, 300 people in one room pointed towards one thing: is finding trades and keeping people out of trouble. So there's this setting for success and fun. If you can join all day, great. If you can't, pop in and out. That's also great. If it's just, anyway, I'm tired of selling it. I'm telling you, it's fun. If you don't like it, I'd be shocked. If you don't find value, it means I failed in pointing where it is. So if you just joined, pop into the chat room, say, "Hi, I'm new. I'll chat with you later." I'll pop in and say, "Nice to be here. Go watch the videos. We'll chat tomorrow morning," because I have to write 2 more articles, eat, walk the dog, say hello to the wife, and then go to sleep and repeat.
David, and anyone else who already subscribes to one of Benzinga's other products, whether it's Benzinga Pro without Nic's program or one of we've got like 20 different products, just shoot me an email. Look at what you already paid us. I'll customize the discount for you. We'll set it up. And
that's so nice. That's awesome. So nice of you.
Awesome. So yeah, I see you, David. It just hit my inbox, I think. But yeah, Nic, thank you again. I'll stick around here for a few more minutes. My next session doesn't start till like 8, but it's that kind of day for me. But thank you again, Nic. Guys, don't miss out. There's like 3 laptops left. So if you want one of those, Make sure you use it. I'm changing my mind. I'm not sticking around. We've been here for 2 hours?
3 hours and 15 minutes.
2 hours and 15 minutes. Nick did all the work. I just get to be here and have fun with you guys. So shoot me an
sat
email.
There and looked pretty.
Yeah, I try. But yeah, thank you everyone. Thanks for being here. Give me a call or an email, and we'll see you in the chat room.
Right.
Derek,
later.
I'll keep answering these questions in the chat, but I'll see you, Nick. See you tomorrow.
Bye.
Yeah, basically, in regards to the laptop, if you buy the subscription, the 7-day period goes by, then we send you a form, you fill out your shipping address, and then we send you the laptop like a couple days after you fill out the form. So that's how you do it. Thank you, Erwin. Thanks for being here. Nasir. Awesome. Yeah, I look forward to your email, Nasir. Yeah, there's a lot of different strategies, right? And that doesn't mean that one's right or one's wrong. But what Nick has taught me is consistency. So if you want to learn how to be more even keel, to not have your blood pressure going crazy over as many trades, I mean, don't get me wrong, it still gets crazy. This can be a very good fit. And just to learn technical analysis, learn different ways to structure your trades depending on the changing markets, depending on what's best for you. It can be a really great setup. Derek, yeah, if you're already a pro member, you have access to a lot of the Benzinga Pro tools. We didn't even talk about that today, all of the tools that are available. But you have all of that, but not the inner circle chat with Nic Chahine. So let me just share that really quick, just for full clarity. Once you purchase, it's gonna look like this. And I'm looking up because it's on my other monitor. But basically, you sign in to Benzinga Pro, and then it's this inner circle chat within the chat tool. And then this is where Nick posts his trades. And then if I scroll up here, like you can see Nick was posting his charts for Tesla, SPY, the Qs. And then if I scroll up to this morning, he had today's trade setups. And this is where you would click into his live session each morning. He gives an update on the overall market, live session, and then you click on that link to join his live session. And then every Sunday, he has his charting session. Let's see, I think I skipped over it here. His weekly charting session at 10 a.m. Eastern time or 7 a.m. Pacific time. And there's also a video for that. So you get the video every Sunday. You get the spreadsheet with all of his charts. And yeah, again, this is the spreadsheet he was using earlier. All the chart links, all of his notes, and then if it's something that he would take a trade on, he tells you, oh, credit put spread, iron condor, short, YOLO longs, etc. So you get all of that in addition to the awesome tools on Benzinga Pro, like our news, our scanners, our watch list alerts, calendar research, all that stuff is included with the price point we're giving you guys today, 50% off with a free laptop. Don't miss out. I'm going to throw the links in there one more time because people are chatting it up. So I don't want you guys to miss out. Link in here, and I'll answer some more of these questions that you guys are probably throwing in here. Let's see, throwing that link in there one more time. And let's see here. Yeah, Derek, yeah, we'll figure it out. But generally the laptops are only if you spend over like $1,600. Option learning videos. Yeah, so, oh, I'm still sharing the, okay, I guess you're seeing the YouTube. That's probably super confusing. On Benzinga Pro, there's this help site in the upper right corner. And if you click on that, then it takes you to our help site, and at the bottom here, it has our options mentorship tutorial videos. So these are all those videos from Nic: credit put spreads, when and how to book profits, what is a spread. So these are just the basics that we basically covered today. And then he posts bonus videos throughout the week, like we're talking today about what's the difference between a calendar spread, a diagonal, all that good stuff. So again, that's from within Benzinga Pro, that question mark in the upper right corner. Or you can access my team anytime through this blue bubble in the bottom right corner of Benzinga Pro. Just click on that and say help or support or news. And in addition to Nic's mentorship, you get ideas from other traders in our ideas tool, like Aaron, Gianni does some of our newsletters. Anne Marie is brand new on our team. She's even given some, she gave a trade today. She gave the trade yesterday and then closed it today for a, how much was that? It's like a $1,300 profit if you risked $550. So check out that stuff. I mean, Nic is thebomb.com, but there's other great traders here within Benzinga Pro. Jay, there's no programs on the laptop. It's just pretty much a base level laptop that you could use to access Benzinga Pro, maybe access your brokerage, or just use it for simple programs. It's not like top of the line. It's just some people want to get started with trading. And we didn't want you to have an excuse. We don't want you to, have any excuse to not trade. So the goal is, if anyone didn't have a computer, they would have something that they can use with Benzinga Pro, with their brokerage, that nothing would be holding them back. And so hopefully it would just give you the complete package. Let's see here. Yeah, this is the annual plan. Annual plan $1,683 for the whole year, all inclusive. Eric, yeah, there are monthly payments, but you'll be paying like over $4,000 a year that way. You'll see that on the checkout page. So yeah, whatever works best for you there. Sri, it includes all of Benzinga Pro, including all the tools on Benzinga Pro: unusual options, activity data, scanners, news, pricing, charting, all that good stuff. Going back to YouTube here. All right, no more questions on YouTube. Then Q&A. Claude, I see you there. All right, I'm copying down your contact info, and I will get back to you right now. All right, thank you everyone who tuned in, who sent me an email. Glad so many of you could join us for Nic's program. I really hope that, obviously I'll see you in the chat room, but for also like and subscribe our channel. There's live trading every morning with Mitch and Zunaid and Ryan, and special guests at 9 a.m. There's pre-market prep at 8 a.m. on the Benzinga YouTube channel, and I look forward to talking to you again